Hello traders, welcome to the video. In this video I'll be showing you simple swing trading strategy. So I have decided to show them how they can easily swing trade with one of the strategies that I have dropped so far. If you look carefully, this is 1 hour chart and this is boom 300. So this strategy is applicable to all the boom and crash markets, but you need to pay close attention to everything I say and take notes if possible. Don't worry, I will show you examples on the boom and crash 500 and 300 markets. So this strategy, you can use it to cash buy and you can also use it to trade the sell of the market, because this is the higher time frame. So for the zoom level, you are zooming in 3 times. So let's say this is the innermost zone. So you zoom in 3 times. 1, 2, 3. So this is the best zoom level for this strategy. And if you look carefully on my chart, I have the RSI over here, which is the relative strength index. And inside I have moving average, and also on my chart I have moving average. So don't worry, at the end of me explaining this strategy, I will show you how you can easily set up your chart to look exactly as what you see over here. As we all know that the moving average is a trend following indicator. Whenever the lines are below the candle, we know that the market is in an uptrend. We see our market continues to move in an upside. Whenever the moving average is above the candles, if you look over here, we see our market continues in a downtrend. So for the RSI, as we all know that the RSI have the 90 level and the 10 level. The 90 level is the overbought region where we know that market is likely to drop, and then the 10 level is the oversold region where we know that market is likely to buy to the upside. Inside this RSI, we have some other moving average which we use as confluence to confirm our trade. This is a very good example over here. This is a sell condition. So what we are looking for is we want to see this black moving average and the red moving average enters into the overbought region, because we are selling to the downside. So we have it over here, enters into the overbought condition, but our main target is the red moving average. Over here we see how the red moving average also enter into the 90 level. So you want to see the moving average crosses the candle and go above the candles. So once you have that around this point, you enter a sell and then you target these lows. We see that market is about to hit this level, so this is a current market. So for the buy condition, we want to see this black and the red moving average enters into the oversold level, which is the 10 level, if you look carefully. So once you have that, it will be at this point. Then we wait patiently for the moving average to cross the candles, and then market goes above the moving average. We enter our buy here, then our stop loss will be below this low. Then we target this high, or we hold our trade until it enters into the 90 level. So this is also a sell condition. Let me explain it all over again. We want to see the moving average in the RSI, which is the black and the red, especially the red, enters into the overbought region, because we are selling to the downside. So once we have that, then we wait patiently for the moving average to cross the candles and go above the candle. So then we enter our sell, then we target these lows that you see over here, or we hold our trade until this black moving average enters into the 10 level, which is the oversold level. Then we close our profit entirely. So let me go to the crash market and also show you how you can use it in the crash 300. So the rules that you follow is the same thing all over again. So you see over here, the black and the red moving average enters into the overbought level, which will be at this point. Then we wait for the red to also enter that level. So once we have that over here, then we wait patiently for the moving average to cross the candles. We even see that before this red touches the level, the moving average has crossed to the upper side of the candle. So once we have that, we enter a sell, then we hold our trade and target these lows, or we can close all of our profits once this black moving average touches the 10 level. And for the buy condition, it is also the same thing as what we have given so far. So we see the red and the black moving average enters into the oversold level. So we have the red over here, and you wait patiently for the moving average to cross the candle and go below the candles. We have the cross here, we see it go below the candle at this point. Then we enter a buy and our stop loss will be below the low. You hold your trade and target this high. So we see that market did not later come into the 90 level before it drops to the downside. So sometimes you take your profit in the intermediate structures. Hope you understand what I am saying. So let me show you one or two examples in the boom and crash 500 before I show you settings to this indicator. Boom, 500. So we see the black and the red moving average enters into the oversold level. So once you have that, the red enters at this point, and you wait patiently for the moving average to cross. You wait for the moving average to go below the candles. That is for the buy condition. You enter a buy at this point. Your stop loss will be below this low. Then you target the intermediate structures, or you hold your trade until it enters into the 90 level. You see how it enters into the 90 level around this point. And for the sell condition, we see how the moving average enters into the overbought level. So once you have the red cross, then you wait for the cross of the moving average. So most times before you see the moving average enters into the overbought level, you always see the cross of the moving average on the main chart. So once you have that, you enter a sell at this point. Your stop loss will be above this high, because this is the high that you don't want to be rated. So if this high is taken out, that means the analysis is wrong. So once you have the sell around this point, stop loss above here, then you target these intermediate structures, or you hold your trade until it enters into the 10 level. So now let me show you settings to my indicator. First thing you do is to click on this indicator icon over here. So like I said, I have moving averages and the relative strength index. So for the first moving average of the main chart, click on the F icon over here. This is moving average. Make your period to be 15, shift to be 0, method to be exponential, apply to close, style to be 3 pixel, and select color of your choice. After that, click on save. For the relative strength index, click on the F icon on the main chart. Scroll down a bit. This is your RXI. Click on that. Make your period to be 1, apply to close, style to be 1 pixel, and select color of your background. If your background is black, you select black, and if it is white, you select white. So the levels is the most important thing that we need over here. Click on this pen icon to select level. Click on this add to add level, type 9010. Your style, make it 2 pixel, and select color of your choice. Here I'm using black. After that, click on save. For the next moving average, click on the F icon on indicators Windows 1. This is moving average. Make your period to be 50, shift to be 0, method to be exponential, apply to close, style to be 3 pixel, and select color of your choice. After that, click on save. And for the last indicator, click on the F icon on the main chart. Moving average. Make your period to be 1, shift to be 0, method to be exponential, apply to close, style 3 pixel, and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. So the reason why I drop a strategy for the higher time frame is because trading the higher time frame is a lot easier than trading the lower time frames. So here you have time to do other things, because you know that a single candle forms in just 1 hour. The only thing you do is to just check your chart every 4 hours or every 6 hours. Maybe you have a setup. So it is less time consuming and it is very accurate to trade. So after this, I want you to go back on your chart, practice this strategy, and try and trade it with your demo account. Learn how you can get a more perfect entries and avoid fake outs. Because if you are not patient enough, you will definitely see fake outs in this strategy. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.